Welcome to Know How series. This is part two. In this one, we're gonna learn how to use trading time frames and trade accordingly. This is your Nifty 50 chart trader. Please like and subscribe. So, in this chapter, we're gonna learn what is a trading time frame, how different users, traders use it for trading. Additional concept is top-down approach. When you are trading, you need to do different strategies and trade accordingly. So one of the main approaches top down. So we'll learn that as well. And just based on theories, we're gonna see a couple of examples on how to trade. At the end, we'll just keep the conclusion. What is trading time frame? Trading time frame refers to the time window for a given for particular period of time. Time frame offers different perspective to different individual based on their objective or style of trading. You also need to consider risk management while using the trading time frames. So that's why trading time frame is one of the important tool to identify future trades and trade accordingly. Couple of examples. So genuinely long-term investors, they use yearly or monthly time frames. Position traders use weekly or daily time frames, and day traders or intraday traders, they use hourly or minutes time frames. As shown in the example below, so daily time frames, your trading platform will give you this option at the top where you can select the multiple time frames. So over here, I've selected my daily time frames indicated as D, and you will see every candlestick is showing price movement or a candlestick star for that particular day. So every candlestick represents a daily time frame for that particular Nifty chart. Right side as well, hourly time frame. So this is a chart where I'm showing an hourly from 9:15 to 10:15. Every candlestick is representing how the Nifty chart move during that particular time frame. So different traders, different investors, they use time frames based on their trading objective. So as I mentioned, a few traders, they prefer daily time frames, whereas investors usually prefer monthly trades. For us, top-down approach is the strategy that what we're gonna approach over here. So in this strategy, we're gonna use combination of two time frames. So in using these two time frames, in one time frame, we gonna analyze the trades, and in second time frame, we gonna make the trading decision. So top-down strategy is nothing but analyze at the higher time frame, you get the whole picture, and at the lower time frame, you able to exit and open your position, which gives you a nice price action. So for example, if you are equity investors or long time trader, you don't want to get disturbed by day-to-day trading activities or what's happening in a market. We're going to analyze the trend, whether it's upstream or it's a bearish on the higher time frame. That's a monthly or weekly chart. And then you're going to take the position or exit position on daily chart with the which is also known as lower frame. So take position at high and exit at the bottom. I'll also show a couple of examples in next slide how I personally do this kind of trading using not only time frames but also additional technical analysis tools as well. Second option as well, second example, day traders or options traders. So calls, puts are usually active. You cannot wait for monthly or yearly time frame to take your action. So in this scenario, you want to be as close as to the action. So you usually do analysis on higher time frame. That's the daily chart. That's also my preference as well. And once we understand how the market is going to move, how the Nifty is going to move, then we take and exit positions. Usually, again, at the lower time frames are based on every dealer's experience. So, a couple of dealers prefer hourly, couple of dealers prefer 30 minutes or even 50 minutes. I personally prefer hourly, given my objective. So again, this one, if you're call and options traders, you want to be as close as what's the activation is happening on calls and puts. So we do the analysis at daily and we open and exit positions on hourly or even minute charts. Okay. So going with the example, we are considering equity investor or long-term trader, how they can use top-down approach. So in top-down approach, I've selected Reliance as one of the stock to do our research. So I'm selecting hourly to analyze our weekly time frame. Whereas to trade, we are selecting daily frame. So objective of equity traders is just to ignore day-to-day noise, day-to-day actions which are happening in equity Reliance, and just to keep kind of a overall goal in perspective or the trend what is being approached. So as you see from the left side, when we are doing the analysis, we have added 50 as well as we have added 200 SMA. This gives, the trajectory or the trend what Reliance is showing. As always, we have added MACD, stochastic. These are the additional technical tools which gives you idea whether Reliance is in bullish phase or Reliance in bearish phase. So for example, you can see up to October, Reliance is still 50 and 200 SMA is showing a nice growth. So the equity investor, we must have done the earlier accumulations. They could have sold it, start selling at the top over here. Post October, we see the trend is now reversing. Reliance is kind of falling by. This is indicated also by MACD as well as stochastic. So once we understand this trend at the higher time frame, saying Reliance is now showing a weakness or exhaustion sign since it's coming below 50 as well as touching 200 on the daily time frame. As you see, uh, instead of selling aggressively, we could have now do our buying approach. So we will not jump directly on the top. We'll wait our price to kind of stable down. So we are looking at MACD as well as stochastics to help over here. So I'm gonna come up with different trading mechanisms as well, where you will learn when to buy, when to sell. So at the moment, I will not be in a rush to buy Reliance when it's below our 250 SMA line. So my first buy will be around this area where I see now prices are starting to cover up and is starting to touch 50 SMA. Then again, I will slowly start accumulating based on our Nifty SMA. And when it actually breaks the 50 SMA line, I will start accumulating further. So with the help of MACD as well as stochastic, will not aggressively buy or put all our capital in one go. We'll try to spread out over the few months as well as seen here. So this gives me a nice average price. So when Reliance goes up, touch the 50 and SMA, we are already in the profit. And again, looking at the future trade now with the weekly as well as daily, we can start slowly sliding and booking our profits. So in previous slide, we analyze at the higher time frame and based on whether it's bullish or bearish, we try to take position on the early or the lower time frames. So in this example, we're gonna look at how the day traders, option traders, they're gonna trade. So expectation is for top-down strategy. This is usually my preference. We try to analyze on daily time frames over here and we try to tend to trade on hourly time frames. Some traders they prefer minutes as well as even 50 minutes, 30 minutes charts as well, which is their trading objective. These are the comforts where my style is, so I'm comfortable doing the analysis on daily and then selling at hourly time frame. So just looking at example, as you see, Nifty kind of moved downwards below 250 SMA and now trying to recover. So prices are recovering. 50 is touching 200. This is our golden crossover. I have also video how to use SMA, so please refer to that. There's a link as well. So in this one, what I usually prefers is I'm looking at the combination of MACD as well as stock analysis and how the price analysis is. It's expected in a bull phase. So if once my analysis is done, then I will go into hourly and try to buy the calls at the bottom levels. Even I will try to sell the puts when the price is at the bottom. That's how it will help to accumulate the profit. So if uh, my indication is price is going to rise, so I will try to buy the calls when, as you see over here, calls will be cheaper at the end of MACD, end of lower of stochastics. So I'll try to buy our calls over here, and also as a strangle, I will try to calls at the top as well. So different users will adopt different methods, strategies on hourly time frame. I prefer to buy the calls as well as sometimes try to sell puts as well. So for options traders, if you are try to do analysis on daily, try to understand where the momentum price is going, and on hourly time frames, which gives you like a six candlesticks patterns during a day based on MACD, stochastic, as well as price momentum. Try to buy and sell your calls and puts. So to conclude, trading goal will define your trading time frame, which one you wanna use it. So as mentioned, you're if investor, you are looking for the long term, then use monthly, weekly time frames to do analysis, and then use daily time frames to open or exit your positions. If you're an active trader, intraday traders, do your trading analysis based on daily charts, which will help you to identify trends. And at the lower frame, such as hourly or even at the minutes time frame, try to trade and take the best of calls and puts for your trading journey. So, top-down approach again, analysis on high time frame and trade on lower time frame. Always use additional technical analysis tools as well as support your decision. So it's going to be a combination of top-down approach, your price analysis, and additional technical analysis tools such as MACD, stochastics to make your informed decision. Hopefully you like this video. I will try to make more know-how series training video, so this will help you in your trading journey. Like and subscribe to Nifty 50 chart trader, and all the best with your trading journey. Thanks.